Yeah, I think that would be a good idea. I think my screen is now being shown. Just let me know if you can see it over there.
Looks good. You sound good. What went on today?
Well, that's well, where do I start? There was a lot of action through Holly today, and just so everybody knows, Andy should be joining us here shortly. He had some technical difficulties, had to restart. So instead of the typical way we start this, where Andy does the market recap, we're just going to jump right in here to the Holly action and talk about some of the risk on plays that were presented to us today. And we got a little bit of everything. You know, we can, if you direct your attention up here to the to my channel bar over here on the left, Holly 1.0 turning in a solid performance, 9 trades, a $1.23 total, gross total in risk off mode. But then again, we've got Neo down here coming in flat on 8 trades, risk on, while 2.0 kind of split the difference. Coming in about the same point total, a $1.20 as opposed to a $1.23 on the Holly Grail, but taking about 6 more trades to get there, but finishing on risk on. So we got that bifurcation here, 1 module in risk off, 2 modules in risk on, and that's kind of a testament to the action that we had in the market today. So we had some nice action off the beginning here with a small well, not too big of a wide range bar starting off with the SPY today. Of course, these are 15-minute candles, so keep that in mind. For those of you who keep up with Mondays and the compare count readings, they were a pretty good tell for the initial push that we had today. After the first 15 minutes, we got those compare count readings, and then for the next 1, 2, 3, for the next hour, we came up here and set the tops in before, yes, you guessed it, stair step up, took the express elevator back down to the lows of the range. So it made for some good trading opportunity, both on the long and the short side. Of course, the longs produced most of the gains today. However, talking about risk on with Holly, we had quite a few examples today. Neo spit out some good ones, and also Holly 2.0, since Holly 1.0. Hey, you made it.
Oh, you would not believe this. Like 2 minutes before I started logging on, my computer just froze on me. It never does that. But yeah, it got me. Sorry about that.
No worries. It always happens at the best opportunistic
Of course.
time. You know, you're like 2 minutes. I'll jump in there 2 minutes before, and we'll get going. But in any case, I was prepared to go the distance here. I was like, okay, if Andy's computer crapped out, he might not be making it. So
no.
I'm not too far into this, Andy. I was just talking about the open and how we, you know, cruised up for an hour. I was just about to jump into a little Holly risk on, but if you're ready,
sure.
Did we go through?
Did you already go through the rundown from this morning? I mean, everything that we run in through our slides, or do I need to go through that?
Well, Scott's already did the intro with the polls, so if you just want to jump right into market recap, we'll just take it from there.
Oh, okay. So I don't need to go through all the slides.
Well, you know what? Hey, I need to backtrack on that. We should always do the disclaimer for legal reasons.
Let me just go ahead and grab
which I forgot to do as well.
No problem. I can take care of that. Sorry about that, everybody. Let me grab the screen here, and we'll get going.
Yeah, I forgot all about the disclaimer. Naughty Jamie.
Yeah, we better at least take care of the disclaimer, huh? And then I'll run through the other stuff pretty quick. Yep. Perfect. Thank you. Sorry, Waleed, and everybody out there. It was kind of a nightmare, but anyway, it's one of those ones where you actually have to go back and unplug the machine, you know, to get it going again. So, oh boy. All right, guys. Welcome to the trading studio. Just keep in mind, guys, that me and Jamie are going to be talking about a lot of stocks and setups and things like that. But this is for educational purposes only. Anything you see in here should not be taken as investment advice. And if you're looking for that, you need to seek out somebody who is licensed, like an RIA or a stockbroker, somebody who is registered. All right, real quickly, guys, I want to talk about our 5-star support, education, and training here at Trade Ideas. It all starts in the trading room, and I'm sure most of you in here have already been there. For those of you that haven't, I want you to know that it's free for everybody. You do not have to be a subscriber. We hope and think that you will be once you see all the people in there using the software and finding really great setups and trades. And we also have 4 webinars a week all in the same time slot, which is 5 Eastern. It's usually a combination between Jamie, Steve, or myself, kind of juggling that trio. But on Wednesday, we do give you Dan Merkin, our CEO, and Brad Williams, our CTO. That shows some great insight on the software, and will also kind of tease you with things that are coming down the pike. All right, let's not forget Friday support session. That's tomorrow at 11 Eastern time. It's scheduled 3 hour. We just open up a go-to meeting and let you guys come in and ask all the questions that you want, and we will answer them. We'll have the full crew there. TI University, this has been going on for over a year now, and it's been very successful. What this is, once you subscribe to Trade Ideas, you get free TI University. It's a set of classes that begin every Monday at 12 Eastern, and they end on Thursday, okay, all in the same time slot, 12 Eastern. And we can see there we kind of graduate up as we move from a beginner to finally advanced on Thursdays. Great place to come and learn about the software, okay? It's powerful, but you're going to find out it's very intuitive, and it's our job to see that you find out it's very intuitive. And we plan on doing just that. And we also have a Q&A after each one of these classes, so you can ask any questions that you like. All right, Brokerage Plus, we've been talking a lot about that lately. It is out of beta. It's been out of beta for a while, and now you can auto trade AI Holly strats. We're seeing executions really ramp up lately. Guys, if you want more information, go to trade-ideas.com/beta. All right, today's agenda, Holly recap. I'm sorry, market recap first, and then we're going to dive into the Holly recap. And then I'm going to give an example of a Holly trade today. Actually, Dan shared this with you. You guys, well, I'm going to save it for later. But anyway, I'll talk to you about a Holly trade and ways that you may, try to trade it. Excuse me, I got a new alert to share with you today. I know a lot of the regulars are excited about that, and for those of you in here kicking the tires, you will enjoy that segment as well, because you learn a little bit about our back testing and optimizing and how you can take these alerts and really fine tune them and create them to where you're getting some really quality alerts coming through. This is going to be a 15-minute hammer alert. We're going to do some back testing. We're going to do some optimizing. I hope I can remember it. One of the things before my computer locked up on me, Jamie, is I had a Word doc with a image on there of all my settings. Luckily I saved it, but I kind of like to back into it. Maybe I'll be able to do that when I'm sorry, I just thought about something, Jamie. I got to pull up my software, and I'm not sure how I do that. If I have my, let me back out of this and see what I can do here. Hold on just one second.
Okay.
All right. Let's see here. Go that. Alrighty, and yes, I got the old blue screen. You know how do I get rid of this blue screen to bring up my software? But when it's behind there. I tell you what, let's do this, Jamie. I'm gonna pass it over to you.
Pause, or just hit, yeah, I'll take let me just take the desktop real quick.
There you go, perfect. Yeah, that is perfect. That will work. And let me just go ahead and pull up my, yeah, I mean, as soon as I launched in here, I just went and pulled up the go-to meeting, so I am totally naked over here. Or as we say in Texas, naked.
Bad visual.
Yeah, exactly. All right, I got it up, Jamie. You can pass it back.
All right, here it comes.
All right. Show my screen. Perfect.
There we go.
All righty. All right, guys, let me pull up the spiders here, and really, there's not a whole lot to go on and talk about this. We could probably record our last 2 weeks of market recap, and just because it's really not a whole lot going on, guys. You can see we've been kind of pinched in between these two moving averages now for 3 days. You got the fast line, we like to call it, the 10-period moving average above, and you got the, zoom in a little more, maybe we can get that closer here. And you got the 20 period just below it, and you can see there we just can't just can't get anything going. And really, guys, for the last month, over a month, we've kind of been in an area. We had one dip down for about 3.5 days, 4.5 days, and popped right back up into this area, and it's making it tough. Holly has actually been doing pretty good the last couple of days, but man, this has been a tough market to get any strategy going. So you know, overall, there's not a whole lot. I keep, you know, my gut keeps telling me we're going to sell off, but man, with seeing these kind of rejection tails to the downside, but one can argue you can see some small ones to the upside. So we're just kind of pinned here. Who knows what's going to happen? Very anemic volume today. You can see the volume on the daily chart there was just, boy, really weak. Let's take a look, see if anything else is happening in some of the other indices. Q is pretty much the same way, pinched between their 20 and 10 period moving average. Diamonds, yeah, just not a whole lot to talk about today in the market. I think it's just one of those kind, just wait and sit on the sideline to see, you know, which direction we're going to go here. And really, you know, I've been saying this for a while. This is why I always like to kind of, you know, pick a level of resistance, and you can see here I could probably take that up a notch right there, and we've just kind of been dancing around this level. This is why you like to see it kind of move higher and trade and get some green bars for about 4 or 5 days before you really can, you know, call it a break out of this level. You know, 1 day is really all we had, and that means nothing. So we're still pinned pretty much at this really strong resistance. So let's see what happens. And Jamie, if you don't have anything to add, we could probably, I see you're doing some work over there and a lot of questions coming in. So we could probably venture on into Holly. Now, I do have some things I'm going to add to Holly, but I need to bring up some images and things that I'd lost before my screen went kapoom.
Okay.
Yeah, so if you wanna grab it and finish your little Holly recap that you were doing when I came in.
Yeah, I was gonna respond into more detail onto Terrence's question there. He was asking, can you do an MA crossover alert with Holly? And it says Holy, but I'm assuming he meant Holly. And just a real quick blurb about that, Terrence. Holly's strategies are predefined every session, so you can't really modify strategies that make the cut for the next trading session. Having said that, it is always possible that she can incorporate some of the cross alerts and filters, or the moving average alerts and filters, into her strategies, assuming they made sense when the optimization process was done and the strategy made the cut, because it scored well enough on our proprietary scoring system. But that's kind of similar to the question we get a lot, you know, can we ask Holly about a stock? Nice concept, but that's not the way it works. It's whatever the statistics point to is going to end up, you know, being the the group of strategies that each Holly module brings to each session based on that score. Okay, so I hope that answers your question. Let me go ahead and grab the screen here. Holly's base strategies are predefined. There's usually 35 to 40. She takes these huge strategies and then refines them. So some of them make the cut, some of them do not, but they're extremely large data sets, probably 40, 50,000 trades or more over a 40-day period. So as our buddy Steve likes to say, we give her the big blocks of marble, and she's like Michelangelo. She'll carve out the statue, right? That's the best way to describe it. And yes, David, sometimes she does use the score filter. Any filter is up for grabs, you know, when she optimizes it. Or, you know, can be used. All right, so Andy, I take it you can see my screen, right?
I can, looks great.
Okay. All right, perfect. So before Andy made his appearance, we were talking about the differences in the modules today. Holly 1.0, finishing the day in risk off, while the other two were risk on. So let's talk about the risk on potentials. But before we get into that, I do want to point out the SMG trade. Is this the one you were going to talk about today, Andy?
No, I was actually gonna, and I'm gonna pull it up and get it. I'm gonna talk about the way Dan traded that one, that SMG. Was that the
Mm-hmm.
one? Okay, yeah.
That was, of course, that is Scott's Miracle Grow. And we were just kind of laughing
Ah.
today because who's going to be trading Scott's Miracle Grow? Every time I hear that, I think about the guy on the commercial, you know?
Oh yeah.
It's a riot. But hey, SMG made the cut today, and the on support spit it out. And the thing, yeah, it is the right time of year for that. Put on your pre-emergent, everybody. So the beauty about this trade is just how, and we talk about this in the webinars from time to time about how, well, number one, you're never going to buy the bottom. Number two, you're never going to sell the top. Well, here's the exception, right? And it's always the exception and not the norm, even if it's Holly, right? Because how many times do we see such just perfectly timed entry and exit? I mean, you would have been hard pressed. Yeah, you could have maybe got a few more pennies up here, but man, I mean, the entry here, the exit up here, playing out perfectly with the timed hold, which on support, if we drag the strategies panel over here, make sure we're on the right segment. On support, 60-minute hold time, right? And that's exactly what played out. So Holly nailed it perfectly today, and as Andy will talk about later, depending on your time in the chair and watching the momentum, some pretty good opportunity not only to the downside, but then on a re-entry as well. And by the way, you've heard us talk about the ability for the Holly automation to do re-entries. In other words, if something gets stopped out, making a second attempt on it. And we've kind of been doing a version of that when we do risk-on opportunities. We've called them trade arounds in the past, right? Where if something gets stopped out, for example, Guild, right, was a short play. And it didn't get stopped out here, but let's pretend for a moment that it would have gotten stopped out. Then it comes all the way back down and punches through that line again. And guess what? It works the second time. So what we've been describing in past webinars is, okay, if you get stopped out, or maybe this was the same bar actually, but you get stopped out, and then the potential to either play it off of the stop loss as an entry, or do what we call a trade around, which is make a second entry, and then you would have, as Steve likes to say, the second mouse got the cheese on this one. All right. So actually, I tested all of these today in a live environment, and the algo that we have going now, it doesn't wait for you to get back down to the entry line. It's the halfway point between the stop and the original entry line, getting a little bit of a head start while minimizing risk at the same time. So, imagine if I just draw the line, kind of eyeballing it here. You get stopped out. Okay. If you had your second entry on, you got short right here, and all this was the potential. You're minimizing your risk and getting a little bit more play, assuming the thing works. So that's what's coming down the pipeline, or is already out there, correct? I mean, it's in the production version. We've been playing around with just second entries only, just to see what it's like. And they appear to be working nicely. I'm sure some of you out there are probably using second entries as well. So that's a good thing. Now, I kind of got a little off track there. Let's go ahead and talk about risk on and the opportunities that were presented today. This SF is a good example right here. So we got the Holly entry right here. We get a nice little lift, and then, hey, we've seen this song and dance before. A lot of the times these things will do exactly this little consolidation area right around the entry line, but we get the nice little lift on this one, which is always a good thing. We get the immediate green. Nobody's complaining about that. Holly calls it right here based on, once again, the timed exit. And Andy, it's kind of getting 50-50 here lately. A lot of the times when she gets into this kind of flattened out little consolidation area, a lot of the times she'll pull the plug with a profit save, right? Not this time, went the whole duration. So what's the spread here? 21 cents, 59 cents. So we had a good little 38-cent spread in there to try to capture, which all we have to do is go, all right, well, do we like what's going on here? Are we just going to exit the entire position with Holly here, or do we think there might be a little bit more upside to it? And of course, there are many different ways that we can try to come to this conclusion. One is, what are we looking like on the daily? We're getting to an area where we might start bumping into some supply or some resistance here. That's one way to do it, or a combination of both. If you which is the 10-period SMA. A lot of times when stocks are in motion, this thing is calling the action and acting as the guiding hand. We did get a little bit bleedy here, so this one wasn't a real easy one to stick with. Or you could have done what I like to do, a little bit of both, the 50-50 method. You're in 100, peel out a Holly with their initial exit recommendation, set your stop loss on the second lot to break even, and this one would have been a nice little risk-on bonus, right? So somewhere between here and here is the spread. Just try to take a little bit. Sometimes you're going to get it all, depending on if you held until the close. But as you can see here, never would have been stopped out on that second lot. The good thing about doing the 50-50 methodology is if it does roll over and stop you up, you still made money on the first lot. So great example of risk-on money on the SF. And then we had a short here, AIMT, AIMT. Entry line right here, opposite of what the other trade that we just looked at did. All right, we're looking for some downward momentum because this is a short play. Well, we got the opposite here. As soon as we make the entry, pain, pain, pain. But hey, stop losses are there for a reason. This is where we're going to get out if we're wrong. Acts like it's going to get up there, can't quite make it. And then we get the release down, a little bar right here, and then Holly calls it. Now this one, she executed reduce risk, right? So once we get down here to profitability, we're ebbing and flowing right around the line, reduce risk, she goes ahead and pulls the plug and takes a 3-cent loser. But we can apply the same methodology here. Hey, we've got statistical probability on our side already from Holly. We did not get stopped out. That's what the hard stop is for. Holly's pulling the plug, getting tired of it. Hey, been there, done that many times. How many times have we done that as humans/traders, only to see the trade go our way, which once again, using a little bit of the 50-50 methodology in this one, obviously you couldn't use the break-even stop, right? You'd have to stick to your original stop because we got the ebb and flow around here. But keep in mind, whether it's the beginning of a trade or into a trade, if the stop has not been triggered and we get this little ebb and flow around the entry line, that's the nature of the beast, right? This thing acts like a magnet a lot of the times. And if you were able to stomach the hard stop, then eventually you would have gotten paid on this one. Just let's just say it wasn't such a nice trade compared to what we just looked at in the SF long. But once again, what do we have here? After we get these little bars right here, ebbing and flowing, not stopping us out, then we finally get the close right here below the 10-period SMA, and it's just the opposite, acting as a hammer, tapping it down as it goes down, and all of these bars closing beneath that 10-period SMA. So if we have a little bit of room on the daily, let's look over here. This little area right here, popping up to the top here, not hitting that stop. So, basically looking at this little area right here as the little tranche of potential, right? We didn't get stopped out, so maybe it goes down to the bottom, which in this case it did. And if you were able to hang on to this one, big difference between 3-cent loser and 44 cents on the end. Now let's take a look at,
Cal asked, where is the exit signal on SF? And he says he only sees the arrow for the entry. And I was trying to explain to him how the shade turns from not really dark, but goes lighter. Yeah.
So, and you did say SF, correct?
Correct.
Okay. So this shaded area right here, Carl, this is Holly's time in the trade in risk off mode, right? So right here is where she pulls the plug and books that 21-cent profit. And then this is all risk on territory right here. So the shaded area is always going to be indicative of Holly's time spent in the trade in risk off mode.
So even if it's a timed exit, it's still the same, correct? I mean,
well,
I assume.
yeah. So look at this one.
Let's see if it lines up.
Yeah.
So
going back to the SMG trade, the green shaded area, this is Holly's time in risk off, because let's just rehash what risk off is. Risk off is simply Holly obeying her rule set, which there are 5 reasons why the trade could close. Stop loss gets hit, profit target gets hit, timed hold gets hit, or she exercises one of the audibles of reduce risk or profit save. So hopefully that makes sense now. Okay, he gets it. Perfecto. All right, let's take a look at Neo, which is, the more aggressive of the trio of the Holly modules here. So on a day like today, where we had this type of action, right? Hey, off to the races. Whoosh, not so fast. And then almost a gravitation all the way back up to highs. So more of the same, as Andy was indicating, in this choppy little range here in between those two moving averages. So since Neo's the more aggressive of the trio, no big surprise to see it come in flat for the day. In a volatile market like this, where we're hitting highs, going all the way down to lows, and then almost recouping, it's kind of a toss-up. Some days, like today, Neo really excels, and sometimes it does not. But it's some more aggressive. But there's still, on a trade-by-trade basis, some nice risk on spread here. We've got 79 cents of risk on spread on the spot trade here, Spotify. Couple things to point out about this one. Prior day candle right here. So we had room up to here on the daily, just looking at yesterday's range. And then what happens when we get back up to the top here? We see this little area of congestion or supply, what we could call resistance, where it did bump its head. However, later in the day signal, we get a nice little lift. And then what do we have? Once again, we get the sideways action. And of course, as I said earlier, a lot of the times when we get the sideways action, that's when she pulls the plug early, and that's what happened here on the profit save audible that she called. So once again, we just have to make the decision. Hey, let's peel out a half. Let's flip the second lot to a break-even stop, which would have kept us in until this hit. So, therein lies the market, right? Which one of these things is not like the other? It just got a little frisky, and you would have been stopped out on this one, even though it would have been a painful stop out. Or you could have said, you know what? I like the way that the 10-period SMA. It's hugging it like a glove. These things are going to happen from time to time, and they suck. But that's the nature of the market. It's a beautiful trade. But on this one, if you were using the 50-50 methodology and using that break-even stop on the second lot, it would have got you, Of course, I could sit here and say, well, what you want to do is put it 2 pennies below or 1 penny below. But, the minute you put it 2 pennies below, it's going to go 3 pennies below. And it's still going to get you. It happens all the time. It's very annoying, but it's just the market for you. The only way you could have avoided a stop out on this one is to have not had a stop. Which some people do, but when you're managing multiple positions, that can get a little bit risky and tricky. So Jeff's got a question: when risk is on, does Holly still maintain some level of stop loss or trail stop? No.
But you're still adhering to the stop.
Yes. We don't throw everything out the window. We just make the decision. Thus the term risk on. Hey, I see you're closing the trade, Holly. I'm going to ignore your advice, and I'm going to manage the trade on my own. And then, of course, whether you pick to have a hard stop in there or just eyeball it, it really just depends. Are you going to be in the chair watching it like a hawk? You don't need to stop, right? Or some people stick religiously to stops. It's to each his own. when I'm in the chair and I've got eyes on, closely monitoring anything, I don't have stops. If I'm going to get up, go make a sandwich, go do something, I'll put stops in. But I really hate using stops for obvious reasons, just like this one. And there are stop hunting algos. Anybody that tells you differently hadn't been around very long. Let's just say that. Okay, Cree, great trade in Cree. We got 22.62. We got a 40-cent spread right here. Once again, profit save. Now, nice entry. We get a nice little lift in the next 1 to 3, about an hour or so, and then we get a little tabletop action up here, a little consolidation. So didn't pull the plug here. As soon as this thing ticked down, she pulls the plug. It takes her 22 cents. This one, if you would have used the 50-50 method, use a stop loss of break even on this one, would have been in it fine and dandy, and you would have gotten this lift here. It would have been kind of a hard call here. We could have, played the game right here, looking at the room, the potentiality of how far it might go. Didn't really get up to those levels, and also getting a bit bleedy through that 10-period SMA. So this one is not as pretty, the spot trade was a lot prettier, but the stop got you on that out of the ordinary wick. I mean, didn't do it all the way through here, but but boom, that one got you. This one didn't look near as conducive as the spot trade, but it held up. And of course, when we have a market that's doing this, a lot, that's it's indicative. A lot of stop outs are going to occur. Things that don't necessarily look high quality, like the Cree, having that closed right there. When I see this bar close below that 10-period SMA, I'm usually heading for the door, right? But this one would have held up had you choose to use the break-even stop. And I do believe, Andy, that's about all the risk on that we have today.
Well, very good. Yeah, you covered it thoroughly. Yeah, good job.
And I want you to have plenty of time for all your new stuff, so let me kick it back over to you.
All right. All right, guys. Well, let me answer, who was it? Gerald asked about the stock composite rating. Yeah, Gerald, what that is, let me bring over my composite score greater than 90. These are all stocks that have a composite score greater than 90. And what that is, Gerald, I got together with Michael Noss and created this. And what it is, it's a ranking. It's a way we rate each stock according to about 17 metrics. Majority of them being technical, but we do have some fundamental stuff in there as well. And it's somewhat similar to the IBD. I think they call it composite score. I can't remember what they call theirs, but it's similar, except ours is more heavily technical weighting. Theirs is more fundamental weighted. We like technicals here. We're all long-time traders. We believe in technicals, but I think it's good to pay attention to some fundamentals. So we do have a handful of fundamental metrics in there, and you mentioned Cree, so let's just pull that up, and you can see over here my single stock window that has a composite rating of 72. Now you can't say that is bad, because looking at the chart here, that looks like a pretty decent chart. It's actually a pretty decent setup, but we have metrics in short time frames as well as long term time frames, even lifetime. Where is the stock in its lifetime, position in year range, above, gosh, we probably have four different moving averages in there. So there's a lot of things that that can happen. The beautiful thing about ours, it's in real time. I mean, so Cree tomorrow could get a nice move off of this potential. It's a beautiful looking chart there. And by the way, guys, when you say, does Holly ever call swing trades? This is a good example of a stock recently hitting a multi-month high, pulling back and putting in a bar reversal today. This is one where I would say, well, I may want to hold on to this one for a few days just by looking at this chart. So Holly gets out of all her trades at the end of each day, but this is an example of where a trader can use his own discretion and say, wow, I may want to hold on this for a little bit longer. But getting back to it, yeah, it's a composite score based upon now 72. Is not bad at all. Now you start getting down below 55, 50. They range from 30 to 100. So you're not going to see anything below 30, but it's a kind of a base score. But it's just a way you can click through. If you click through some of our highly rated ones, you're going to see some very, very strong looking charts where they're going to be like position in year range is going to be very high, position in lifetime range. So these are going to be performing well on all metrics. So, all right. I hope that explains some of it for you there. I got some questions coming in. Let's see here. All right, just want to make sure I'm not missing anything. Okay, guys, one thing I wanted, Dan was nice enough to show you. Guys, I've been talking a lot about, guys, it's man and machine when it comes to trading. Holly puts out some great ideas, but you have a big advantage when it comes to trading. And I think you can well outperform what Holly does. Not so much on the entry, but on the exits. That's what you're going to be your advantage. And a great example today is, look at the spies here, okay? We open up and we try to move higher, and then all of a sudden we get this downward thrust. Now, Holly is good, and she does keep an eye on and has profit save and reduce risk and parameters to protect from further losses and secure profits, but at the same time, she cannot keep an eye on every tick in the market, okay? That is where you're gonna outperform Holly. And I'm gonna give you a great example of how Dan traded SMG today, okay? And you will be able to see the buys and the sells on the chart here. The green little flags are the buys, these are the sells. So what he did, he took the entry, beautiful entry there. Now this one you seeing right here is showing his second entry, okay? So that's a little bit confusing. This first entry was down here when the alert went off the first time. He wrote it up, okay? All right, he's got one eye on the market, okay? The market all of a sudden throws in 3 topping tails and then starts this action. This is where you as a trader don't feel like, you're stuck with Holly's parameters, where you can take over and say, wow, that's a nice profit. I got, well, I can't see the numbers here, but $1 out of that, $1.50, I don't know what it is, but he bails, okay? Market comes down here, all right? He's, and starts to dig in, put in a bottom. What does he do? He buys it back right here, and he sells it, about an hour later or longer. So this is, guys, these are the people that are going to make money, trading Holly. You're going to get the really good entries, okay? It's up to you to manage your risk and to also manage your profits. And I can't tell you, the people that think they're going to come in and just hook up Holly and sit back and watch her perform, I'm afraid they're in for a tough go of it, because it's all about getting good entries and then you taking over and managing the risk like a mini hedge fund, and that's where it's going to become. You're going to see the value of, because if you don't have to be out there looking at the entries, and the same thing goes for setting up your own strategies. I'm going to show you one today that I think, and I'll share with you that I think you can take and apply, as to the Brokerage Plus. As a matter of fact, you may see this one in Holly one day. I think it has that potential. And what it is, we're going to start from scratch, because I kind of want to show you kind of the way I think when I'm building the alerts. All right, let's go to an A window here, and we are going to start from scratch. All right. So what I'm doing for you guys here in the first that are kicking the tires and don't know the product, I'm going to build an alert real quick. And this is how we build it. This is our configuration window. And what I'm thinking, the first time I'm always thinking in my head. I just don't pull it up and start looking through and picking out, alerts and filters. No, I'm thinking of what I wanted to find in my head. And today I'm thinking of a 15-minute bar, a hammer pattern for a potential bar reversal. Okay, so the first thing I'm going to do is go in here and I'm going to get a 15-minute hammer. There's my alert right there. So we're going to add alert and we're going to check it. All right, and then we're trying to create things with a little more volume for Holly. So what I wanted to do was come in here and add a market cap. I wanted a market cap of 2 billion. That would be 9 zeros. And I wanted a price range between $5 and $200. And I wanted I'm just trying to think of the things I wanted right off the bat. Oh, now average volume of at least 300,000 a day average over the last 10 days. And there's one other thing I wanted to, I'm going to show you, see how I start. I'm running out of time, so I'm just going to kind of cheat here. I actually kind of did some back testing to do this. But change from the close. I want it down. I want it down on the day. In other words, I don't want it up on the day and just pulled back a little bit and pulled back a bar reversal. So I'm going to come in here and put it down at least 0.25%. All right. We're going to take this and let me give it some columns real quick. Change from the close. We'll do a little 5-minute volume, and let's see what else we want to add in here. A position, maybe a position in 20-day range. I'd kind of like to see that. All right, summary. Let's just call this 301. Not 301. We'll call it 15-minute hammer. All right. So this is pretty basic, okay? And what's happening here? I'm not getting any titles up here, Jamie.
There you go.
Yeah. All right. So what we're going to do is we're going to back test this strategy. Okay. We're going to open it wide open on the time. All right. I'm going to do an all-day day trade. This is for Holly. I'm going to see how it does just holding it all day. Risk management, I am going to use a percentage, and I am going to give it a 1% stop loss. Pretty average for a day trade. We're going to go advanced. We're going to open this up all the way to get as much data, biggest sample size as we can, and then we are going to run it. All right, it's finished running. We have a profit factor of 1.86. We got a total trade count of 2,838. So not bad, just for the first run. That's actually, pretty decent. We want to cut this down because you can see our profits here when we're factoring a $3 commission. Is being eaten up by the number of trades that we have. So we want to try to, whittle this down. So we're going to come in and optimize real quick. And I'm probably going over a lot of the stuff that I did. I mean, this took me, I probably did about, 25 back tests before I got these numbers. But I wanted to check out position and range, okay? Because I want this to be in the lower portion. In other words, I'd love it to be in the lower portion of its position and range. What I mean by that, guys, is a range is 0% being the low end and 100% being the high end. Okay, and if I'm just looking at a position and range filter, it's talking about the intraday range. So I would kind of like it. I'm trying to find something that's trading near the low end then it puts in a 15-minute hammer, and there's a good chance we may get a bounce on that. So let's just take a look at position and range. And what I'm doing, guys, we're optimizing this, okay? And we'll put this on 5. And let's see when it gets in the upper portion, it kind of falls out. We start getting some less performing results here. A lot of bad results right there. We're just not getting that strong. But you can see, look at here in the the ones down here in the bottom port, we're getting some nice profit factors. So I am going to use, I'm going to try something and just use these that's in the lower portion. In other words, if I right click and I put use max right here, it's going to go in and put $14.99. I'm just going to make that, I like that, it's a round number. All right, so what I'm doing, guys, I just eliminated all these trades that came out right here, and we're only taking these number of trades that are in, as you saw there real quickly, position in range is a max of 15. If I click on my show me button, the price is no more than 15% above the low end of this range. So we know it's in the lower portion, you know, the bottom of its intraday range. That's what I'm looking for. If I get a hammer when it's trading in the lower end of its range, there's a good chance it's going to possibly reverse. All right, so let's just go ahead and back test this. We'll put it right there. And we're going to back test this strategy again. Now that we've made our changes. All right, look at there. Got up to 246, a profit factor of 246. Total trades 826, 61% profit factor. So the things are getting better. We could probably go in and do this, you know. I'd like to see that a little bit further discrepancy there, but that's not bad. It's still not bad. One other thing I want to do, I started thinking, I said, you know what, I'm gonna test it on a 20-day range. I want to see where it is within its 20-day range and see what happens. So I'm gonna go back into optimization, okay, and I am gonna find position in 20-day range. Where is she at? There she is. All right, and I am going to put, let's go with 5 again. Well, it's not bad right there. Let's see. I had mine tested out the first time. I probably did this, but look at all these numbers right here. Just kind of you got some bad ones right here, but really not that bad. Let's put, in other words, I don't want it. We're going to use a minimum of -10. So that would mean it could not be further than 10% below its 10-day range, the low of its 10-day range, if that makes sense. So we're going to go in, and I'll show you when I get there. We're going to put the minimum of -10. All right, so there we go. Let's click on our show me button. It'll say the price is no more than 10% below the low end of this range. Okay, so we don't want it falling way out of its 20-day range. There's a very good chance it's going to continue down that path in the wrong direction. All right, let's try running it again now that we made this change. Okay, click OK to make sure it changes. All right, and let's run it again. All right, 247. So 815 trades. So not much of a change there. Only did it a penny. Now, like I said, guys, when I'm doing all these back tests, and I may do like 25 back tests, I may go in and do changes to price, to time, and everything. So this is not going to be the same as the one I'm going to share with you. I'm going to bring the one over that I shared earlier. Okay. And like I said, I probably took a total different route. It makes a difference if you optimize one filter, the sequence in which you optimize them. It can really change the other sequences, if that makes sense. So this is the one when I worked on earlier. This is the configuration that I came up with. All right, the change from the close was a max of -0.25. Same thing there. Price, position, and range. This one came out 15. Yeah, that was the same. But the difference, I think, was the 20-day range, position 20-day range, 0 minimum was the best. And I'm gonna just want to make sure maybe some changes in today's calls made it look better. So what we're going to do is just go ahead and back test this one real quick to see what the numbers are, if they're still the same. Time of day, that would do it right there. I didn't optimize it by time. So before I do this, I am going to optimize this by time. 30-minute interval, I'm gonna put that on a 15. And I think it came out from 10 o'clock to 10 to 1:15. No, 2:14.
Like 12:30 might be the magic, because look how dramatically the win percentage drops off after 12:30 or 12:29.
You mean 1:14 here?
Well, no, I was just looking at the 50s compared to the 80s and the 60s, right? So yeah, you could keep the
Right.
56s, or you could shave them off.
Yeah. Well, what I like about this is the profit factor is so good too. So let me try it. Let's just try it from 10 to, what was it? Yeah, 10 to 1:15. See what happens. Got to go back in here. This is so cool. There's not another system out there on the market where you can do this. And we'll put it on 1:15, and let's run it and see what happens. Oh, it's looking sweet. And 275 with 556 trades. And just for grins, what I'm going to do is do this one, the one I did earlier, and just compare the two. And I will share with you the best one. Now this one went all the way to 230. Let's see what this one is. Look at that. Look how close. Both profit factors 275. Both, I mean, less trades on this one. Okay, so you need a little less buying power. 38 to 27. Yeah, so pretty close there. I like a little more trades, and not only that, you can sit here. If I share this with you, you'll have more room to do your own back testing. So if you want to get it down to around 500, you'll still have some more room in there with it. So pretty cool, guys. I am going to share this real quick with everybody. And for those of you who are in here, what I'm able to do, and you're not a subscriber, I'm able to take this and share this with all the people who are subscribers, just by simply copying and sharing.
Andy, we also had a couple of requests for your composite rating top list, I believe. So if you wouldn't mind dropping that one in there as well.
I sure will. The first one will be the 15-minute hammer. And let me get the composite rating one and share that with you as well. Comp rating greater than 90. So guys, I do a lot of these, and the reason I do, because I think when it comes to Brokerage Plus, I know a lot of people are going to be getting Brokerage Plus because it's the most incredible thing I've ever used as far as you know, an interface, and it's just so easy to manage and manage your risk and profits and things like that. But what you want to do is start building some strategies that will give you some really good signals, and because I think too many people are just coming in and don't want to trade Holly. Holly's going to have some great stuff in it, but I'm telling you, you start working with some of these ideas and building your own strats and putting them in there, you're gonna, and just remember, when you do your own, when you build your own, you're the only one that's going to have it. Okay, so you know, versus you may have everybody and their dog trying to, you know, trade the Holly signals. All right, guys, it's been a good one. I got both of those in there. I'm going to bring in Scott. Scott's going to walk us out of here. Hang on. He will have a discount code for you guys. So, Scott, if you want to come back in.
Hey, thank you. Yeah, let's review a couple things on the way out. We have an ebook that Andy and Jamie both contributed chapters to, so make sure you get it. It's got 5 ways to stay afloat in a rocky market, 5 ways to win in a post-BTFD market. Just put your email address in at trade-ideas.com/ebook to get the download link. There's a podcast. We'll have a new one up tomorrow. You can get ready to hear it by searching for Trade Ideas Podcast wherever you listen to podcasts, and check that out. We have a discount code. Spring Forward is good for the remainder of this month, which is just a few more days. All caps, like you see it on the screen, so be sure to type it that way. This code can also be used to do an upgrade from standard to premium, so keep that in mind. If you have any questions, email us, info@trade-ideas.com. You can follow Jamie on Twitter at QuantBot, and today at Today Trader is Steve Gomez. We also have at Trade Ideas. Trade Ideas Pro is the Facebook handle. You can follow there and share stuff, but the email address is the best way to reach us. We'll have a recording of this up later on tonight or tomorrow, so keep an eye out in your email for an update on how to find it. Thanks, everyone. Thanks, Jamie and Andy. Have a good one.
All right. Yeah, thank you, Scott. Thanks, everybody, for your kind words. And Jamie, have fun tomorrow at the golf match. Yeah.
I'll do my best, Andy. I can't make it. It's been so long, you know. All right. Thanks, everybody. We'll see you on the flip side. Bye-bye.
Bye-bye.